Welcome to the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. The caffeine is beginning to kick in, which is very, very welcome. We are the hosts of this show. Also, you can join us at Unfiltered Investor. We take these topics and go into them even deeper. Please join us there. And thank you guys. Remember, this show, audience participation is encouraged. Bobby, a big turnaround in equities today. Give me thoughts.
You know, it looked a little dead cattish to me, didn't it? I mean, if you look at what the S&P did today or what the NASDAQ did, they were both, NASDAQ was the leader in the clubhouse for most of the day, right?
Right.
I'm looking at it now. I mean, the high was up 1.8% on the NASDAQ futures. It's only up 63 right now. So I would have literally said if the downtrend was more than 2 sessions, I would have called it a dead cat bounce.
Yeah.
And I think that has a lot to do with sort of the confusion caused by the beige book. But people have to remember that the beige book it's old news, really. Right.
Yeah.
It's
I never even pay attention to it.
Yeah, I never do either. But, you know, that's when the move down toward the lows for the NASDAQ futures started. It had made the low early.
See, at the Unfiltered Investor, we had been talking about buying puts to carry you through September and part of October. Yeah. It's a seasonally weak time of year. Do you stick with that?
Yeah, I do. I mean, again, like the seasonality is also statistically significant for stocks. I mean, it really, as Mike Arnold put it, it's from the middle of August all the way to October expiration is where that seasonally weak period is. I've seen studies, and our guest may be able to talk about this because she's really big on seasonality. I've seen studies that show that it shouldn't be sell in May and go away. It should be sell toward the end of August and come back at the end of October.
Really? Okay, well, that's interesting to me. Well, let me repost this real quick. I just want to make sure people know where to find us. And let's bring on Carly Garner of DeCarly Trading. She's one of our favorite guests, one of our good friends, all the way from sunny Las Vegas. Let's bring her in. So what do you do in the winter in Vegas? Do you still bike and everything?
Oh my God. Vegas. I mean, Vegas is awful. Nobody should move here. We're full. But no, I've been talking up Vegas for years, and I regret it because everybody's starting to move here, and now we're getting a little bit crowded. There's traffic and stuff. But the winters are amazing. We're barbecuing on Thanksgiving and Christmas. We're going to the mountains, and well, the mountains are a little chilly, but we can go out hiking in the desert and ride bikes and things like that. Literally any day. If we happen to have like a little bit of sprinkle or some sort of wind, we get upset because we missed out a day of biking. But most of the time, no interference from weather, and it's amazing.
That's outstanding, which brings us into our first topic: winter, fall, seasonality. See, that's called professionalism. That's what I do. Why I'm that together. So starting the mid-August, Mike Arnold noted to us, and I did buy extra put protection going into this time of year. How big a believer are you in the seasonality of it, and what do you do to take precautions?
I pay very close attention to seasonality. It's one of those things, just like any other type of trading tool. It's not going to work every time, but I promise you, ignoring it is not the way to go. So most of the time it works. As far as the stock market goes, we're talking about the S&P. Absolutely right. Things start to get shaky late August. Now, it doesn't happen every year. Some years it's minor pullback. Some years it's precipitous. We don't know what's ahead of us. But what I can say is we're up against really thick resistance. It's a monthly trend line around 6,500 in the S&P. If we get some sort of market surprise or something to, catch people off guard, that 6,500 could reverse prices pretty sharply. So what we've encouraged our clients to do is things like risk reversals, sell calls, buy puts, or last week we put on a spread where we sold a call option. I think we were selling 6,900 calls and then using that money to buy put spreads. Again, it's not a recommendation, just an idea to give you an idea of how you can hedge your portfolio risk or even speculate on the downside, because seasonality is bearish. Charts are a little bit bearish in my opinion. So I think it's better to be safe than sorry here.
And Bobby, I want to see where you come in on that too, but I wanted someone to say, what's the Yogi Berra quote? 60% of the time it works every time, or something like that.
Was that actually Yogi Berra, or was that the guy from Anchorman?
Oh, I think it was the guy from Anchorman, which, by the way,
Ryan Fantano was his name.
It takes 60% of the time. It works every time. Right?
Yeah. So I've always said about seasonality that if anybody thinks seasonality is a trading strategy, they're out of their minds.
Yeah.
But Carly took the words right out of my mouth. You'd be an idiot to ignore it. I mean, it is, especially like the equities, this particular period of time. It's right a statistically significant amount of time that these are weak periods for stocks. And that doesn't mean, as she said, that doesn't mean it's going to drop, 2, 3, 9, 12%. It just means there's weakness there. And what we did in our newsletters, we just started recommending fewer stocks, started having tighter stops, started exiting things quicker. And for people that are in that more buy and hold or that more medium term stance on stocks, they should be doing what you guys just talked about. Risk reversals, put spreads, or just even if you want to buy just outright puts. I mean, the VIX is pretty low. Carly, is that something that in this time of the year, if the VIX is spiking, you're obviously not much of an option buyer, but is it okay for protection even if the VIX is up? Or I'm looking at a VIX today at about 16.3.
Yeah, I'm really, really cheap when it comes to option buying. So for me, I'm almost never a premium payer. But again, on the flip side of that, sometimes I get in trouble because I refuse to pay for premium. So it goes both ways. But what I could also say is for like in my personal portfolio, I'm heavily weighted treasuries and cash. So somebody like me, if you're not going to hedge or you're not going to take some sort of option position, maybe it might just be as easy as have some powder dry, because if we do get that seasonal dip, you'll have some great opportunities. If you're already in the market and that dip happens, it's hard to take advantage of it. But if you've got powder dry, it's a lot more psychologically comfortable, and the math works out a lot better as well.
Oh, I like that a lot. Tell me this. You just mentioned you're normally never just an outright premium buyer. If the options market is reflecting like a 12 VIX, will that change your mind? Then do you just buy?
Yeah. So, I mean, there's a time and place for everything. If options are wildly cheap and not so much in the S&P. In the S&P, we're generally, if the VIX is very low, we're almost always selling calls along with it, because a low VIX generally means we're probably overheated on the upside. It doesn't have to. But let's talk about a market that's maybe a little bit different dynamic, such as crude oil. When crude oil volatility is very low, we will never sell options. We'll just buy puts. Sometimes we might buy calls if that's what we think. But so if volatility is low, absolutely, we try to be buyers, not sellers. The S&P is a little bit of an outlier when it comes to how we approach it, because even when the VIX is very low, S&P options are still really expensive. If you've ever shopped around, you're buying, with the S&P at 6,400, to buy anything for less than $1,000, you're looking at deep into the 5,000s, and that takes a really big move to pay off. So we really don't do that.
And I want Bobby to ask the next question, but I want to underscore something she said, which I think is really important. When generally speaking, when we see a 12 or 13 in the VIX, it means the stocks are hovering around all-time highs, which what Carly's saying is then it sometimes makes sense to sell a call despite the fact that the VIX is low, because we're already bumping against all-time highs and hovering around that spot. Did I say that the right way you wanted to get it out?
That's absolutely right. So when the VIX is low, generally speaking, the calls are actually overpriced. It's a different dynamic in the stock market than almost any other market. So just,
that's fascinating.
Keep that in mind.
Yeah. Bobby?
It's Andrade, Chokaria, and Furist in 2012. The authors highlighted September as the most reliably negative month, attributing its factors to post-summer selling, fiscal year adjustments, and lower trading volume. November.
Charlie, did you have any idea what he was talking about, or did you think he was having a stroke like I thought for a second there? Okay,
Jimmy, you're showing your whiteness by not knowing those foreign names. You shouldn't do that.
Exactly. I thought they were just okay. You go.
Jimmy's like, the name's not Smith. I don't understand what's going on here.
I've told you before, I am mixed race. It is a proven fact. So yeah, that's right. So treat me differently.
No, basically they did the study that dismissed the broad sell in May strategy and pointed to the selling in September and coming back in the beginning of November as a statistically significant event that Carly already mentioned. Carly, in terms of you do a lot of price action analysis, and I changed the title on Twitter of this particular session that we're doing right now. It was something like, does I don't even remember. It's not important. But I changed it to the price action more than the fiscal headlines matter. Um, when you're looking at price action, what's the major focus for you? For example, I'm looking at the NASDAQ 100 futures and I see a pretty distinct head and shoulders top. Do you look at traditional patterns like that, or do you have something else in the secret sauce that you guys look at?
So I pay attention to those types of patterns because most people are watching those types of things, and it's important to kind of keep in mind what others might be thinking. Because in the end, we don't look at it this way, but we're trading against ourselves, number one, but we're also trading against everybody else. And so if everybody's thinking one thing or everybody has a certain pattern in mind, it's important to be aware of that. But when I'm looking at price action, I tend to be a contrarian, which sometimes works very well. Sometimes it doesn't. Sometimes I get caught off guard with things. That said, what I'm looking for is overheated markets. If I see something that's just a statistical anomaly, kind of like what we're seeing in gold today, not to change the subject, but the entire daily bar in gold is above the upper Bollinger Band, which is like a statistic, not impossible, but it's super improbable. So when I see things like that, it tells me either somebody knows something the masses don't, they're front running some sort of information that we don't have, or maybe a big trader or a big fund is getting blown out of some short calls or some sort of short position, or it just might be kind of the last hurrah blow off top type of action that we often see in commodities. Now, the seasonality, if we're going to go back to that as well, just again, not to change the subject, but the seasonal high in gold is actually today. So, we're going to see how this pans out over the next couple of weeks. But when I see a seasonal high coming at the exact same time when the market's acting irrationally bullish, to me, that price action is screaming, something's not right here, and to start looking for prices to turn the other way.
Did you trade it?
We did. Unfortunately, we started trading it yesterday, so we were a little bit
goodness.
early.
Yeah.
Maybe a lot early if it continues like this, but I still feel pretty good about where we're at.
Jimmy, you remember we talked about this yesterday, and I said I didn't think it was time. I thought we needed another day or so before we started hedging gold longs.
Right.
And there was a very specific reason for that I don't remember right now, but it had to do with our rotation zone that Mike and I look at. Mike developed it. And whenever you see the 8 EMA pushing the price like this, there's usually another day or two of extension away from the 8 before people begin to realize that that's a little bit crazy and that you should take some profits or maybe hedge or at least stop buying. So I don't disagree with you that today is probably, well, you said it, the seasonal high. It typically is today. But we are coming towards, and I'm not trying to contradict, we are coming towards the cultural wedding and festival season, right? For India and China. And those are the two countries that actually buy physical gold. Do you think there's going to be selling elsewhere that'll keep the seasonality consistent? Maybe central banks or something?
Yeah, 2025 has been kind of the year of runaway markets. Fundamentals be damned, right? I mean, it's just so I wouldn't be shocked to see gold press up to 3,700, maybe even a little higher, just on bandwagon trading. Like we've seen it in society when we talk about politics, but then we also see it in the markets. Not a lot of there's not a lot of critical thinking going on. It's a lot of group think where people get an idea and then everybody jumps on the same idea without considering consequences or price or anything that we in a rational market would consider. So, we'll have to see how it pans out. But I will say that I do have some clients who are jewelers, so they happen to be Indian, and even they are looking at the screen like questioning their sanity. That even they think this is broken. So, we'll see how it goes.
Bobby, can we put up any charts and have like a real-time analysis, maybe of oil or something like that?
Yeah, I could put up a chart. You want a crude chart?
Yeah, I would love a crude chart because I want to get Carly's take on it because I know we talked about it on our other show yesterday, and it seemed interesting that it was potentially making a run, about to make a run for the upside. Carly, you look at crude quite a bit, I would imagine, right?
I do. Crude oil has been, honestly, in my opinion, wildly resilient. I am extremely surprised we haven't seen it melt down yet. And the reason I say that, I think I mentioned this on the show last time I was here, 65 is kind of the line in the sand where once we get below 65, the market often just kind of gives up the ghost and we collapse into quite a bit lower price ranges. I mean, 20s or 30s on a few occasions. So the fact that we've been hovering up here and retesting that 65 has kind of surprised me. So I'm not bullish. I'm not overly bearish unless I see, new lows on the downside. But as long as we're under 65, we're kind of in the danger zone. So what we've done, just to go back to your conversation a little earlier, crude oil volatility is pretty low. This is not an environment to be selling calls or trying to get cute with anything. So we're just buying really cheap puts down in the high 50s, mid 50s, just in case it falls apart. And then if it actually does break above 65 and start moving higher, we'll have to recalibrate our thinking. But for now, we're still leaning lower, but doing it just very, very lightly with long puts.
So it's interesting. This green horizontal line is 65. I think I've had it on there since the last time you were on the show.
Yeah. That's funny. So Bobby, I think I know how you'd trade this. So it seemed to break out and then it went back and retested. Now, where is your spot to buy it? Does it have to go back above 65?
Yeah. So one of the ways that I use these moving averages that you see, the red one is the 200, so ignore it. The green one is the 50, so ignore it. It's basically these two, this orange and this blue, right? Which I'm kind of trying to point to right here. They're flat, so I'm flat, right? So if you look, for example, I actually did this trade and I didn't do it really, but I was trying to do it. When you see this cross here, I don't trade the crosses, but when you see these two starting to widen and angle, I'm looking for a move up that then flips back lower to do a short. Okay. The same thing was here. When this started widening and moving up, I'm looking for price to go in there and give me an opportunity to buy the move back up. Didn't happen here. So I don't have any trade here. When we were talking about this yesterday, okay, Jim said if we break this high, he would go long. We didn't, so he's not long. I said for me, it would be more a retest of 65 that then moved up higher and went long. That didn't happen either. So I have literally like no interest in this chart. I've been looking at this and I'll draw something on here that's going to be really sloppy. To Carly's point, and I think probably since we spoke last time, this was the channel I was looking for a breakout through. It was kind of like here, right?
Yeah.
And this breakout went, but it didn't retest, right? And this is what we were talking about, Jenny.
Well, it did retest, but it didn't bounce.
It didn't bounce. That's
Right,
my
yeah.
point. It retested, but it broke it. So I should say it didn't retest and hold.
Yeah.
So this particular candle here is a breakout, and here's the continuation from it. But I can't buy that. I needed to come back down and retest the breakout area and then to move back up. This is not a perfect channel. I realize that as I'm looking at it here. But this is sort of the price range around 65, right? That we have to get out of before I haven't had a crude oil position. God,
Yeah, I didn't
since
think
back
so.
here.
Yeah. And what's the fundamental story?
I mean, from my perspective, it's the combination of what seems to be a weakening economy plus OPEC producing in that weakening economy. This rally we got yesterday, right? There was all kinds of rumors in the crude oil space that OPEC was going to slow the pace of the production increases they've announced, right? Because they're going month to month.
Right.
They have a meeting every month and they're announcing every month whether they're going to continue the increase in production or not. And there were rumors that because price hadn't started moving higher, they were actually going to say in this particular meeting, and I actually said it in my CME commentary yesterday, I said, this is likely to continue until either the rumor gets contradicted or OPEC actually announces that they're going to slow this. They have a meeting on the 7th. The rumors were contradicted today. Okay. So the entire move yesterday got erased and we're back into that level. We're back below Carly's 65 and we're back in the recent range. Some people might look at this chart and say crude oil has been crazy. For those of us that trade crude oil a lot and look at crude oil, this is typical. Okay. This is very typical.
Well, I need you to both. Okay. I have to give a topic for a speech I'm giving in approximately 8 weeks. And the last 3 speeches I've given at this conference have been the case for gold, the case for silver, and the case for platinum metals group last year. Now, I don't want to redo any of those because that's no fun. What asset do I want to talk about? Again, my theme is always going to be, not always going to be, but the weak dollar and how to protect yourself, how to protect your purchasing power, because they continue just destroying the shit out of the currency. What's the asset for the next year, Carly? Can you help me on this?
I personally think the commodities in general are going into like kind of a lull period, kind of like what we saw between around 2014 and 2019, where we go nowhere fast and it's just really, really quiet. So I don't have anything to pick for you long term. In the short run, I think natural gas is probably a little bit of a sleeper. That one's kind of been beaten down, and we're going into winter weather season. So I think that one has a shot at a decent rally, but it's not going to be like a 2021 or 2022 rally. We're talking like maybe $4, $4.50 if we're lucky. Nothing beyond that. And same with wheat. I think wheat's probably a sleeper. So if you're interested in grains, that might be something to look at. Wheat has completely repeated its roughly 2007, 2008 top, where it went to $14, came all the way down into the fours. Repeated it to a T with the $14 wheat a few years ago. And now we're trading, we did dip a little below 4, and I think we're probably basing out. So the last time around, around this time, we found a low with the low 4s, and we rallied up to 6.5, 7, I think. So that might be something to, a hard asset to look at.
What do you feel about cryptocurrencies?
It's just not my thing. I don't get it. It has no intrinsic value, so I have a hard time wrapping my head around it. I'm too practical. I miss out on a lot of really good opportunities because I think overthink it a little bit, but don't have much of an opinion.
Bobby?
So it's interesting. I'm speaking at a crypto conference down here in Naples in November, and I am the counterpoint. So that's going to be really interesting. What Carly just said strikes me as extremely important. One of the things, and I think you could possibly talk about this in November, Jim. One of the things why I prefer gold over crypto, I like both. I mean, I like Bitcoin eludes me like it eludes Carly. But what I like about it is that it's decentralized and you could, God, I'm going to regret saying this out loud, hide it from the government.
Right.
Right. So you can actually invest.
When they kill me for Google, they're going to kill you for that. But anyway, go on.
Exactly. You'll be shot, and then I'll be like, "Why'd you guys shoot him?" And I'll be at your funeral, and they'll shoot me.
They'll get you.
So I look at it from a perspective of saying, well, it's really bad because being at this stage where we have to look at things and say, I'm not sure if I want the government to know everything that I have, and they do, right? Except for the physical gold that I actually hold. And I want you both to think about this and tell me where I'm wrong on this. Carly, I think you already agree because you said Bitcoin has no intrinsic value, right? A lot of people argue that it does, but I say that the only thing that is actually proven to be an asset and currency is gold, right? And Jimmy, I think you can talk about gold as a long-term hold on top of, or in addition to, or even superseding Bitcoin.
I just figured out my topic. This is it. You guys are here for the live event. It is going to be a discussion about gold versus digital gold. What's going to be better in the next quarter, the next half, the next 10 years. And we're going to look at that. That seems like a pretty good topic, right?
It does. And I put up the Bitcoin futures chart for a reason, because we have a technically correct double top here that triggered one of these two red candles. Doesn't matter to me which one. And the first target is at the 200. It just happens to be at the 200. And the second one is below the 200. And Bitcoin has had a history of holding up at the 200 lately. This was a scare, right? This was a scare. Yeah. So if we get down to that 200, I think it's probably a good time for people who believe that it's an asset to probably get into it. But the fact of the matter is, for me, and Carly, can you speak to this as to whether I'm crazy to say this? When does Bitcoin become something that you don't have to exchange for a currency to use? I mean, that's what I'm going to be focused on when I speak in this conference and say, all of you that have spent your Bitcoin on a Lambo or whatever else, were you able to go in with a Bitcoin? And by the way, the lunch for this Bitcoin is at Steak and Shake, which accepts Bitcoin in exchange for burgers. So I'm going to find that very fun. I might buy a couple Bitcoin just to bring them to the Steak and Shake in my cold wallet. So do you guys think that there's anything other than it's a hidden investment? Is there going to be a time in either of your opinions where you're going to be able to say, no, I don't need to convert it to something else?
Carly to answer this, but I'm just going to say I'm not even sure it's hidden already. But Carly, you take that question.
So there's some places in Vegas that have been taking Bitcoin for long periods of time, but from what I can see, it's wildly illiquid. Bid-ask spreads are wide, so anytime you use it for a transactional purpose, you're basically taking a big haircut every time. And I know we do that when we swipe our credit cards, we're getting 1 to 2, 3% in fees, but Bitcoin, from what I've seen, is 5, 10%, maybe 15%. So we're talking pretty substantial. I don't think it's not anywhere near transactional at this point, and I don't think it will be. I'm not saying it won't be some crypto, but I don't think it's going to be Bitcoin. I just don't see it coming. But then again, let me just put it this way: I get a lot of criticism because I don't see the big picture in Bitcoin. But I will say, sometimes things increase in value, and sometimes we as humans bid things up to unreasonable levels, and it doesn't make sense. I'll go back to Beanie Babies, NFTs, diamonds that have been replaced by lab-made diamonds. I mean, humans aren't necessarily rational, so this can go on for a lot longer than my imagination will ever allow it to. But again, maybe I'm missing something. So you tell me, Bob. I don't know.
Let's take a quick time out. Luis, will you put the banner up? Guys, this is the part of the show where I ask a favor of you guys. We love doing the show, and we love the live participation from the audience. Tradier is offering 3 months free of Tradier Pro, their options research and trading platform. We talk to people who are absolute options enthusiasts who've been trading them for decades, and novices, and all of them share one commonality. When they try this system, they love it. Just scan that QR code and give it a try for 3 months free. I'm working on this pitchman thing. I think it's going good. What was that guy who made all the money? Billy May or whatever. You remember that guy?
Billy Mays.
Billy Mays, right. So people, whoever, I don't know who makes you sell their products, but I could sell that chamois thing you clean with and shit. Let's go. Right, Bobby, you're up.
I want to put up, I was just typing to Luis to put up Remo's last comment here, Bitcoin versus Ethereum. Does anyone on this screen understand why Ethereum has been outpacing Bitcoin to the upside?
No, because Tom Lee does, and I plan on having a conversation with him about it because he was kind of one of the early people a couple months ago to explain it. And admittedly, I don't have all the details. I do own Ethereum, just because I don't know. Somebody told me many years ago that it was the place to own. Carly, you don't have any idea either, do you?
No.
Not a clue, right? Carly,
they said that Ethereum is supposedly the platform that blockchain operates on the majority of the time. I still don't understand it. I mean,
no, but I'm going to understand it by the time I give the speech. So
I think blockchain technology, by the way, this is what everybody who doesn't understand it as an asset says. I'm about to say it. I believe in the technology. I don't know if I believe in the technology.
What the hell does that even mean? Right?
One of the best places that decentralized chains would be valuable, in my view, is real estate. I personally, I'm going to get some of my friend Tim and others mad at me. I still don't understand the existence of real estate agents. It seems to me like they should have been wiped out a long time ago. I think it's probably, as Carly mentioned earlier, it's human nature. We're lazy. We want someone to set up the appointments, find the places. We can't go on it ourselves. But blockchain was explained to me years ago as, let's say you replaced your chimney, and let's say your neighbor didn't and lied about it. If it was all on the chain, he couldn't lie about it and claim the value that you increased your home by that your neighbor didn't, right? Because this would all be on the chain. It would be verified. So I see that as a thing, but it has not entered everyday life yet because I don't see it. Do you guys see it anywhere?
No, of course not. I barely even know what it is.
We're still looking for Carfax reports when everything should just be on the chain.
On the chain,
you
right?
know? People aren't adopting it yet.
So
can I put up Widge's comment real quick?
Let's hear Widge's comment. Yeah.
I'm still waiting for my junk wax era baseball cards to come back any day now. Now, I'm not sure what junk wax era baseball cards are.
No, but
Luis, can you put that up? Maybe
I know what it
means,
though. Is that, we were mentioning Beanie Babies and tulips and all that shit. And when anyone says to me that, well, it doesn't have any intrinsic values. You said, Carly, and I'm not trying to jump on you, but to an extent, neither does gold. To an extent, neither does any individual stock that's trading wildly above what any multiples would justify. And what we're just talking about, like the Honus Wagner card. The Honus Wagner card has kept its value for decades and decades and decades, just because people assign that value to it. And if I had a mint condition Honus Wagner card, I could sell that for $3-4 million right now. And that's Widge's point, is that we ultimately agree on a price of something. And that price doesn't have to make sense. And a matter of fact, we can make all kinds of examples of how it doesn't make sense. So is Bitcoin, and yeah, again, I know I'm not saying that anything that's radical, but that's why I'm in Bitcoin Ethereum. And also that's why I'll never let it get to be more than 3 or 4%, maybe 5% of my investable. Because if I lose it all, I want to be like, oh, you remember those Bitcoin days? Those were awesome. But that's it. That's all I got for that.
Yeah, I think you're 100% right. I agree with everything you said. I will say, I think we're kind of expecting others to behave in the same way we behave. You just said you have 2, 3, 4%, whatever. It's a small amount of your portfolio in these types of products. I think other people are putting much more of their assets in these types of products. And I think they underestimate the risk. And to go one step further, I think I talk to retail traders. So I've maybe I'm just talking to the wrong ones. I don't know, but it's my observation that a lot of them are living way beyond their means. For example, they're running high credit card debts. They're financing their luxury car for 7 years. And the reason they're doing those things is so they can take extra cash and put it into risky assets. In their mind, they're not risky assets. In their mind, they're investing and they're building their future. But I don't think they fully understand what happens if society goes through a deleveraging cycle, kind of like what we saw in the financial crisis. Again, I'm not saying that's going to happen. I just think there's a lot of loose ends out there. And if for some reason those loose ends come unraveled, I think we're going to be in a lot of trouble.
Amen. Bobby?
So I want to point out gold's intrinsic value because it does have some. It does. First of all, it doesn't corrode. It lasts for centuries. That's what makes it valuable for jewelry. Not the fact that it's shiny. It's the fact that it's rare and it's survived. I mean, they're still finding gold jewelry from the Titanic, right? They're finding there was a Roman coin discovery recently, and you could read the coins. So it's basically impervious to fire, to cold, to water, salt water, everything. It's impervious. It does conduct electricity, but it's not used for that much anymore. It was used as fillings for years, for the reasons that I just mentioned. Now it's too valuable to use it as fillings. And it was universally valuable. Gold was valuable in cultures that never knew the other culture existed, right? So there's something about gold specifically. I guess it's the rarity and the durability that made gold valuable in cultures that didn't even know the other culture existed.
I'd love to read about that. Do you have any? Can you point me in any?
Yeah, I'll send you some.
Please do, because that's fascinating. I didn't mean to interrupt. Sorry.
Yeah. No, it's okay. But that's where it becomes intrinsic, is the value was recognized by humans because of its durability. Bitcoin is not durable because it doesn't actually exist. And I brought this up to a Bitcoin expert recently that I had a drink with. And I said, if my keys are written down somewhere, right? My unique phrase is written down somewhere. And my physical wallet and my keys are in the same house that burns to the ground. My Bitcoin's gone, right? And he said, no, it's not gone. It still exists. You just can't get it anymore.
Well, what's the difference?
So of that amount of Bitcoin that exists, my Bitcoin is part of it, but it's gone to me.
Yeah.
Now, there are technologies, and I think this might be the key, Carly. There are technologies that are coming out now where they supposedly can securely store your phrase. I think it's a 21-word phrase or something.
26.
I could make up a 21-word phrase. I forget how long it is. But it's your private phrase where they can actually store it for you just in the case of something like that. But that means somebody else has it, right? I knew of some people. I used to live in the Palisades in California, right? And I knew of people who their entire house burned to their ground. Their debit cards were burned. Their credit cards were burned. But they were actually able to sift through the rubble and find their gold. And one guy was having trouble at the bank, actually took some of the gold coins they had, took it to a gold place and got cash so they could eat. Now, I know that was a temporary thing, but it's a real thing, right?
Yeah.
So there is an intrinsic value to gold. I'm just not sure I'm defining it correctly. It's like I have it in my mind the same way those cultures that didn't know each other still valued gold, right? And gold is the only thing that was actually used for money. The Honus Wagner baseball card was never used for money, and it can burn.
Yeah.
Right.
But the Honus Wagner card and artwork is used for storage of wealth. I mean, a lot of people convert their wealth to shit like that. And we're going off on something.
And that's why I said gold is the only thing that's an asset and a currency, or has been.
I like it. Whereas Bitcoin is just an agreement between you and me, Carly, but it's a verifiable agreement because it's on the blockchain. That's all it is, right? Okay, let's go to something that we trade more of. Let's go to, by the way, Carly, have you looked at Google and Apple after things today? Your commodities and futures.
Yeah.
Don't get involved in that. Can we look at platinum then, Bobby? Can you put that up?
Yeah, I can put that up.
So for people who are watching this, 1 year ago, November in New Orleans, I gave a speech entitled The Case for Palladium, but it was really the case for platinum group metals, which are platinum, palladium, and rhodium. Is that the third one? Whatever. It begins with an R, whatever the hell it is. And I went more with palladium, but platinum was definitely in my thesis as well. The thing is freaking exploded, and now it looks like it's going higher to me, and I want Carly's opinion on it. Have you looked at this chart already, Carly?
To be fair, honestly, I have not. No.
Okay. No, well, you can just give a quick thumbnail on it now because it is. Okay, then. Look at that. It's a beauty, right?
Yeah.
So, Bobby, how do you trade this? And then Carly will get the next one.
Well, here's a really good example of what I was talking about earlier. And Carly, any charts you want me to put up, let me know. See how these have crossed and they're starting to widen?
Yep.
Okay. This is my signal to look for a long. All right. So I wish I could draw on these charts, but I don't think I can. So as these moving averages continue to catch up to the price, which they do eventually, right? They always do. It happened here, right? We got this parabolic move. Actually, I'll show you an example on this last up move. I have got to admit that I did not trade this though. So here we had my moving averages, which for everybody watching is the 8 EMA and 21. And Carly and I are actually going to be talking a lot about this in Las Vegas next week. Carly and I are speaking at an event together. I'm not going to say who it's for, but if you're in Las Vegas, you'll be able to find us. So you see that they crossed up here and they started to move at an angle and wide. So here we got the price moving away from the 8, and here we got to move into, we call this a rotation zone. So what I would do is I would basically draw a best fit trend line right here. And by best fit, I mean it can be sloppy. Doesn't have to be exact, right? And as soon as I got to close above this best fit trend line, it's a signal for a long for me, which we got
would
right
have been
here.
Quite nice.
What's it? Yeah, would have. And it got the same thing
long.
here,
Yeah.
right? And you got the same thing here. And then here it collapsed. And if I drew this particular trend line, this is what I like about this particular way of entering these trades. If I drew this particular trend line here, I never got the close above before the moving averages cross back down. So there's no trade there for me.
Interesting.
So when I look at this chart now, I'm going to be looking for a move back into the rotation zone here. Now, that means there's going to be a lot of runaway moves that I don't get to take advantage of, right?
Yeah.
Carly, when you're talking to clients and they say, well, we didn't get in, but it moved. How do you deal with that question?
I'm sorry, repeat that question. I apologize.
When people see a big move and they say, why didn't we get into that? How do you answer that question?
Well, we do get those sorts of things often. And,
Sure.
and the reality is you're never going to catch all the moves. And I've learned in this business, the most important thing is to not lose your shirt. And so if you miss something, stay calm, don't chase it. The worst thing you can do is chase it and wait for some sort of pullback or better setup before moving forward. The worst, I've seen more people lose money chasing breakouts at, being late to the party than probably any other type of strategy. So breakout strategies have worked in the last couple of years, like honestly, probably better than any other period in history. We've had lots of markets breaking out. But that doesn't mean it's easy money. You can, if you're especially if you're someone that uses stops instead of options for hedges and things like that, you can easily get washed out on a quick pullback before it resumes. So I think Bob's idea of once the breakout occurs, being patient and waiting for some sort of retest of a breakout line is amazing because that's where most people make their mistake is they extend themselves at the worst time and then get stopped out before it materializes.
I love that. That is a perfect takeaway for this. What market do you think is interesting that we should put up, Carly?
We've already talked about gold. We can
We
go
talked about
to
wheat. We talked about nat gas. What about any of the other commodity space?
Do you have cattle in your arsenal?
Yeah.
Hell yeah, we do.
Oh
What
man, the
kind of
cattle market. Ooh,
Bob and I are mostly carnivore, by the way. So this
dude.
chart is just nothing but depression to me.
Yeah, can you guys stop eating meat, please?
No, I cannot. I refuse that request.
I mean,
I'm going to start hedging myself, perhaps.
the livestock market has just been eating people up and spitting them out. And the reason I say that, a lot of people are going to look at this and say you could have been long and just made a ton of money. But the thing about commodities is agricultural commodities or renewable commodities, they go down more than they go up. So it's not always if you're long all the time in commodities, you're never going to make any money. So that's for starters. And second, we deal with a lot of farm hedgers, like cattle ranchers that are basically trying to protect their price risk. But this year, the cattle markets behaved in a way it's never behaved literally ever before. And we've dwarfed all-time highs. It's just been such a volatile, one-directional ride. A lot of cattle hedgers have gotten into this cycle of, they hedge. They did the right thing. When I say hedge, I'm talking selling futures or doing risk reversals where you sell calls, buy puts. 99.9% of the time, that's exactly what they should be doing when prices are above all-time highs, because commodities generally are the type of market where high prices cure high prices. And so if you're a farmer or a producer, you need to hedge those, lock in those prices. But this time around, no such luck. We ran above the 2014 highs were the previous highs, and we've kind of just made those almost feel cheap at this point.
Yeah,
it's been a parabolic run. Yeah, look at that. Yeah, it's been a wild ride. You don't see that in commodities very often. Almost never do you see a move like that.
So when people talk, Carly, about a commodity super cycle, are they including ags, or is that something completely different?
I think they're usually talking, when they say super cycle, a lot of times they are lumping in corn, maybe soybeans. Rarely are they talking about cattle or hogs. Those are markets that kind of just get kind of left by the wayside usually. But this time around, it's super ironic because if you look at the grains, corn, soybeans, wheat, they're in the dumps. They're sitting at multi-year lows, and we've got cattle at multi-year highs. And the craziest thing about this is usually when grains are cheap, it pulls cattle prices down because it's cheaper for ranchers to feed their cattle, and the supply increases. And we're seeing those two markets at like basically the biggest spread between each other ever, and it's not even close. Like, it's just so many rules are being broken. Probably there's a lot of things that got us here. There's kind of a perfect storm or black swan of fundamentals, weather related, societal related, and then we have people like you guys that are eating meat no matter what the price is. And so there's all these things are adding up and creating this wild ride that, I hate to say it, but I don't know when it ends. I've stopped trying to guess when this thing is going to end because it just hasn't worked to try to predict that. But it's probably not going to be pretty when it does. Commodities do this every single time.
Quick question about it, because okay, again, I don't mean to be the conspiracy theory guy all the time, but it seems awful convenient that there's this huge global cabal that wants people to stop eating meat, and they've grown in power, and all of a sudden meat is going through the roof, which is exactly what they want. Is there anything to that? Have they regulated the shit out of it globally so much so that it's driven the price through the roof?
I can't speak for globally, but I can say here in the US, yes, a lot of, I'm not a rancher. I don't live it. If I don't live it, I try not to pretend like I understand it fully, but it's, people have told me that the previous administration put a lot of regulations that have kind of made their job more difficult or not even or less profitable, and that's really worked against the supply as well. So it's partly Mother Nature, but it's also political as well. But all of these things are kind of working together.
I had this statistic that I thought that it was, I'm going to get it wrong, but I used to know it exactly. But I think 10% of the people in this country eat like 60% of the meat. Have you guys ever heard a statistic like that? Because that's I might have the numbers not quite right, but it's pretty close.
Here's a comment that kind of goes with what you're talking about, guys. Local anecdote: driving by pastures where we usually see cattle and they're not there, we've got a problem here. It's interesting to me, and this is what I wanted to, Carly, you talk to ranchers like this. Jim just mentioned the regulatory side of it. Do you know any specifics about that? Because I know that more and more of these places, I see more and more, social media commercials, and I get pamphlets all the time, local ranchers selling their beef directly to consumers as opposed to going to grocery stores. But it's not cheaper, at least not from where we've seen it. I mean, there's a place in Florida that I've been looking at lately. I bought a whole cow recently, or I should say half a cow. I split it with a neighbor of mine. And we're still eating that. And that made it really affordable. But all that did was make it as affordable as it used to be in the grocery stores. So do either one of you have any examples of these kinds of regulations? I'm not sure what they are.
No, and I'd like to get Marco from Independence Arc on a show to talk about that, even if it's just a 15-minute segment, because I think it's wildly interesting, but I don't know the specific regulations. I know.
Carly, are you hearing any of this from your clients? Or
honestly, nobody's ever really mentioned specifics, so I don't know. But if you do recall the Green New Deal that talked about cow farts and all that kind of stuff, so there definitely were some roadblocks put on the industry. So. Yeah,
I guarantee you there's tagging regulations, there's monitoring cow farts regulations. All these things are part of it. I just don't know the extent of it yet. And by the way, someone who's watching here, please contact us via Twitter. If not, we'll have Marco from Independence Arc on at some point in time, and he can go over it, because I want to know, because to me, there's something that's sinister in this bullshit about cattle prices going through the roof. Carly?
I should have mentioned this earlier. So regulations, yes, absolutely. But another thing that's occurring, there's an unintended consequence coming from government subsidy programs. There are government insurance programs that are kind of newer, and they're being taken advantage of by ranchers, and they should be. That's what they're there for. And the idea is they can basically buy subsidized insurance against the price going down. I've heard of cases where people are picking up the phone and calling the insurance agent and getting LRPs, which this is the government insurance, on cattle that they haven't even bought yet. So there's a lot of inefficiencies in the program, and a lot of ability for prices to go up because ranchers are basically their risk is being subsidized on the downside. It's not unlike what we're seeing in corn. We see the corn market, under $4. A lot of that is because, and it's not the farmer's fault, and I'm not going to blame anybody, but the reality is the government puts these subsidies on corn to make it less risky for farmers because they're trying to protect farmers and ranchers. But what it does is it distorts market pricing. In the case of cattle, ironically, it's making prices go higher because it puts less risk on the price risk on the rancher and more on the government. And in corn, it's kind of having the opposite effect. But I'm convinced that these programs are having unintended consequences that are basically interfering with the price discovery mechanism.
Hell yeah. What's that, Bobby?
That's Hormel. I'm just looking at a couple of stocks that I know have involvement with meat. And obviously Hormel has other things going on. Tyson, a big chicken producer, but they also sell meat. So I'm just trying to look at some of the red meat stocks, for lack of a better phrase.
Yeah.
Pilgrim's Pride is another one. Let me look at that. I think that's PPC.
And again, the meat for these companies would be a massive input cost, not exactly a margin.
Right.
Yeah.
So, but we are seeing price increases. So
yeah,
I don't know how much they're balancing it out, but it's likely, it's one of those things where there's a replacement theory, right?
Right.
People like you and me, we eat meat. I'll replace a ribeye, Carly, with a pound of ground beef.
Yeah.
I'm still going to eat the red meat, right?
Hell yeah.
I don't know what's going to happen when I have to resort to cube steak. Yeah, that stuff. But
the thing is, imagine trying to feed an entire family, kids. I think a lot of not everybody. A lot of people have come to the reality that pork and chicken will have to do.
Yeah, it's funny because
we got something called round steak about once a month when I was a kid. With my mom trying to feed 11 people at once.
Sure.
Yeah.
I mean, we shouldn't go into this now, but I do have ways. This is a new listing, JBS, and it's the world's largest meat packer. They're listed as JBS, and they got a pretty good move higher. See, this is a perfect example of what I was talking about. There's not enough data back here for me to trade this, but you got the cross here, the widening. There's the first move, best fit trend line, move up. This is the second move. But after this spike here, it just kind of takes me out of the whole thing, and there's not enough data on here.
Makes sense.
Yeah, but there's something that we should talk about in the future. I've actually got ideas for people who want to do this kind of a diet. And Carly, I'm telling you, this is getting like almost ridiculously popular to just eat meat, and people see and feel changes. The next thing you know, it's like, well, I'd rather eat chicken. No, chicken is bad. Chicken. It's like people take it too far. Yeah. Fish is still good. Chicken is still good.
I like chicken.
Eggs are still good. You know, people go too far with this.
Carly, tell the people where they can find you.
So actually, we just started a new Substack. So if you're interested in market commentary, check out DeCarly Perspective on Substack, or you can find us on Twitter at Carly Garner is the handle.
Well, thank you so much for coming. I love when you come on. You are so much fun to talk to, and you are such a wealth of knowledge. I totally appreciate that. Thank you to you guys who are watching. We love the audience participation in this show. All the retweets, all the DMs you give us. Thank you so much. This has been Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.